Good afternoon, everyone, and thank you very much for joining us for today's Digital Sandbox demo. We have got a huge number of you on the demo with us this afternoon, and it's brilliant that you have all joined us. You're in for a treat. So we have 12 teams who are working at the cutting edge of sustainable finance, who'll be doing their elevator style pitches for you this afternoon. It promises to be a really, really exciting session. So let me first just remind you about the Digital Sandbox initiative. Well, it's a 10-week programme hosted by the Financial Conduct Authority and the City of London Corporation. And it's really designed to stimulate and foster the development of innovative products and solutions within financial services. The Digital Sandbox platform provides a suite of features that innovators can access to help to develop their proofs of concepts and demonstrate proof of value. Features include real and synthetic data, access to mentors and experts in the field, communication channels with other participating teams to really encourage and foster collaboration. And this initiative is really aimed to reduce time to market, improve the quality of solutions developed, and really reduce that early stage development cost for firms. And through the sandbox, what we're hoping we do is that we mobilize our strengths in tech and financial services with skills across the industry to really engage in tackling really common challenges and sometimes the most pressing challenges of the day, sustainability clearly being one. So this is the second Digital Sandbox cohort after a very successful pilot last year, where we focused on the challenges that have been exacerbated by the pandemic. The focus for this cohort is innovation excuse me, in the area of ESG data and disclosure, with the ambition that the solutions that you will hear about today will contribute towards creating a greener financial sector and aid the transition to net zero. ESG data and disclosure is also a corporate priority for the FCA and City Corporation. It is clearly a key area of interest and one that we know that we need to tackle together in order in cooperation with the industry. We received applications when we opened this from 40 organisations across the world, from both innovative startups and more established larger firms looking to make a difference in this space. So let me again take this opportunity to congratulate all our firms for making it through what was an exceptionally competitive process. This afternoon, each of the 12 teams will present the solution they have been developing during the sandbox. Some of these are brand new concepts and others have already been in development for a little while. So please do bear in mind that each of the teams are at different starting points. So what are you going to see this afternoon? Well, the presentations will follow a 4-minute format called 240 Seconds to Glory that we have ruthlessly borrowed from NASA. And a warning to the teams, we have a lot to get through this afternoon, so we will be very diligent on our timings. But this is an interactive session, so following on from the pitches, we'll have 3 minutes for audience Q&A. So please do type your questions into the Q&A part on your Zoom screen rather than into the chat function, and we will read these out. We've also developed a survey for feedback on this afternoon's session, the link to which will be put in the chat. Please do give us your feedback on this session. It's really important for us to figure out, what we're doing well, what we could be doing better. So the aim of today is to give a flavour of where each of the teams are at this point in time and where they hope to be by the end of the cohort. So with that, I will now hand over to my colleague Giles French from the City of London Corporation, who will be comparing the rest of today's session. Giles, over to you.
Great. Well, thanks, Francesca, and good afternoon, everyone. As you've heard, we've got a lot to get through, so I won't waste any time. We'll just move straight on to the presentations. So as you've heard, each team will have 4 minutes to present, and then we'll have a maximum of 3 minutes to answer your questions. Just a reminder, please try to put your questions in the Q&A facility, and we'll get through as many of them as we can. So the first session, we're going to be hearing from those members of the cohort who are addressing how to help consumers understand ESG data. We're first of all going to hear from Butterfly Data, then Connect Earth, and Vested Impact. So I'll now like to invite Butterfly Data to take us through their presentation. Thank you.
Cool. Hi, everyone. Good afternoon. My name's David. I am a data management consultant who works for Butterfly Data. We are a team of technology consultants who specialize in data science and data management. Typically, we have a lot of financial experience, but not a lot in the ESG space. So we are also understanding ESG data as we go along as well. So last year was unprecedented. We saw an increase in the public interest in ethical investing. The Extinction Rebellion protests at the top left, they targeted large banks who were reported to have large sums of money financing fossil fuels in Europe. And we also in the same year saw the GameStop sort of share events that happened where we saw an explosion in brand new investors who were influenced by the popular Reddit Wall Street Bets threads to purchase GameStop shares. And if you combine the two, it means we have a lot of new investors coming to the market. And we also have a increasing public interest in ethical investing. So we put forward this idea of a dashboard that was sort of targeted at these new investors who maybe don't really understand the ESG data as well as they should do before parting ways with their hard-earned cash. And we wanted to make it accessible for new investors specifically because there's a lot of products on the market already which are either pay-for products or they are quite complicated in the way that they pitch ESG. So the aims of our project is that we wanted to create a dashboard which would allow customers to personalize their understanding of ESG metrics. And what we wanted to get from it is also an understanding of the customers on the other side. So we wanted to be able to track user interaction with the dashboard and for the consumer to also interact with us in the way to say, let's like or dislike this rating of ESG. Our proposal was met with positive feedback, specifically around the ideas of tracking user interaction, but also this like-dislike feature in the dashboard to sort of get this sort of correspondence between ourselves and the end user about whether they agree with our metrics. So we have been designing wireframes and developing an initial dashboard, which is populated using data from the ESG Enterprise API through the Digital Sandbox. And you can see here the wireframe, we've got pretty standard, it has to be quite accessible to a normal consumer. We have controls, tabs, hopefully some graphical input, and on the left-hand side, the weight and the like-dislike button. And we have some initial sort of prototype work going on, which is developed using Python and Flask. In the top, we've got the different governance grades, environmental, social governance, some sliders so that the consumer can change whether they want to see just high scores, low scores. And then on the bottom left, although it's not implemented in this, we wanted to give the consumer the opportunity to sort of turn off one of the three parts of ESG metrics. So the useful thing about the ESG enterprise data is they return the individual scores for E, S, and G. So what we're hoping to do is give the consumer the ability to weight the aggregated score by different ones. So maybe there's a customer that only cares about environmental factors and not about social or governance. And then in the bottom left, although they're not as fancy as a Facebook like, you've got the like and dislike button in case somebody disagrees with the data.
Hi, David. I'm just, oh, you're wrapping up. Great. Thank you.
Very good. Thank you. Next steps is we're just looking for mentors and collaboration to start integrating new data sources, not just the ESG enterprise data. And we're looking to finalize the development features for the interaction with the dashboard and to get it hosted on Azure and pushed out to get this interaction and collaboration going with the customer. There we go, Teresa. We're done. Hope that's just in time. Possibly just over, but I'd like to invite any questions now.
Great, thank you, David. Thanks for taking us through that. And just say, yes, please put your questions again in the Q&A function, and we'll try and get through as many as we can. Does anyone like to put a question to Butterfly Data? think, David, maybe you're suffering from being the first up and people haven't warmed up with their questions just yet.
I'm okay with this.
Got to come now. So the first one we've got is, where do the scores come from?
So the scores actually come from the ESG Enterprise API. It's a very useful data set because they return per organization a environmental grade, a social grade, and a governance grade, and then they also just total that up. So A plus B plus C equals D. What we're hoping to do is, just in the short term, is to just weight those scores to make use of that personalizable metric.
Great. And how will you provide education to consumers regarding the investments?
Yeah, so I mean, we want to give them the tool that they can sort of play around with it themselves. It's something we haven't really approached yet, if I'm honest. We're going to provide a lot of tooltips, a lot of documentation that goes alongside it. But if you're asking for like a training course on how to use the dashboard, I'm not sure we're going to manage that within the time frame.
Great. And the other one I was going to pick on is there any other data you're looking for to improve the quality of the initial weightings?
No, and this is where a lot of the collaboration, we'd like to get in touch with different mentors to see how we can sort of integrate maybe the different bonds data or the ESG by countries data sets. There's a lot of synthetic data sets through the Digital Sandbox, which we haven't tried to integrate yet, but we're hoping that the dashboard we've created is quite flexible. So it's just a case of building that data structure behind the dashboard that it can show off this data behind it.
Great. And then I'll probably aggregate a couple of questions which have been asked about consumers understanding the ratings and whether there's any risk of misunderstanding or misinterpreting the information. How are you addressing that, David?
Exactly. So it's something that we can definitely look to improve on. A lot of the time, some of the more industrial sort of proprietary products, they will aggregate theirs into sort of quartiles. So if you're in the top 25% of industry, it's something that we can look to do with this. Yeah, again, sorry, I don't really have a proper answer for you. We're still building on it, but we'll look into ways of how to sort of contrast different companies against each other.
Great. I'll probably just I'll ask one more, David, and then we'll move on. And just to say that we will try and answer as many questions that are posted as we can if the Digital Sandbox team can help as well. But just this question, David, how do you define your ESG metrics, and are they measured against a specific initiative?
So at the moment, we're using the data from the ESG Enterprise. So really, the definitions are how they define it. And that's one of the reasons why the understanding ESG data was such a useful theme, was that a lot of these metrics are hidden in the way that they calculate their metrics, or at least they are very, very complicated. So the product we want to do, what we're trying to make, is small scale, so that a customer only has to wrap their head around 50 companies at most. And hopefully, I mean, creating a bespoke metric might be out of the scope of this project, but we just want to be able to interrogate ESG data using a dashboard. So possible expansion projects.
Excellent. Well, thank you. Look, we're going to leave it there. And sorry, I should just make clear to our audience that we are asking the teams to come back to any questions they can't answer during their session in writing. So you should all hopefully be able to get your questions answered. But thanks very much, Butterfly Data. Let's move on now to Connect Earth.
Hello, my name is Alex. I'm the CEO and founder here at Connect Earth. And I'll talk a bit about what we're building and also what we're doing in the sandbox. So we started our mission last year questioning the following. So over 90% of a consumer's carbon footprint comes from things they buy, but nobody really has access or insights into this every single day. So why is measuring your carbon footprint not as easy as measuring the calories you consume? And most importantly, where can we find this data? Where's the data that we need to be able to make those decisions, to actually not just change, how we buy, but change our habits? So we went out and decided to actually collect this data and to standardize it using machine learning, and to basically look at carbon emissions data of thousands of companies and products. So we collect data on scope 1, 2, 3 emissions data, emissions reduction progress, science-based targets, pledges, etc., and we create bespoke emissions factors for different companies and eventually also products. And what we do is we make this data super available by making it a simple API solution that we embed primarily into financial products that are exposed to consumers and companies. So for example, we can actually calculate the carbon footprint of purchases. And here we see, okay, so we have the carbon impact based on financial data, meaning that a bank like Cogni, for example, who we work with, can actually engage users through sustainability by showing them the carbon footprint of their purchases. And we do it at a whole new level of data accuracy by actually using merchant and product level data for this to make it much more actionable. Currently, category level data is the standard, where you have emissions factors that are for certain categories like groceries or clothing, but you can't actually see differences in the companies that you buy at to drive your habits towards more sustainable purchasing habits, and also in the products. So we already work with various banks and customers, which is important to mention because we're kind of testing things in the sandbox simultaneously with different partners. And we have a lot of learnings that I'm going to share now. So we work with, for example, Raiffeisen Bank, a big bank. We work with neobanks, open banking providers, and also with invoicing companies like Cavalia. And we really focus on 3 key areas. The first one is user engagement. The second one is data. And the third one is that we're API first. So we want to be flexible, but we want to be in depth, and we really want to be able to engage users as much as possible. So in the sandbox, we're actually testing different things. For example, how to best present the data to consumers. So on the one hand, we look at CO2 tracking charts. What way can we actually show this data to consumers to also maximize emissions reduction, but to not create too much noise in the app to basically distract from the actual experience? And we also break down the carbon footprint by merchant and look at transaction details too. So we're looking at different ways that we can just present this data, not just collect it and have it, but actually make it an engaging experience. And we also learned different things. So we're actually trying to learn more about how we can align this to the solution that our customers have and to their needs and targets. So for example, we found with one company that if we capture an audience of consumers that care about their carbon footprint, we can then cross-sell them into ESG investing or sustainable pensions. So we're always trying to align profit of that company with the ESG aspect as well, because obviously it's really difficult to just say, hey, you have a green value proposition when there's not a real business case there. And we also look at things like premium product upselling by making it part of premium packages. And also we found really interesting things like increased card usage, especially in countries where there's a big cash culture. This is actually a reason why people use their card much more. So really quickly, I have 30 seconds left. Next steps and where we ask for help. So we do have some POCs planned at the moment, for example, with Raiffeisen Bank, and we're always looking for more. So if you know anyone or are interested, please reach out. We're also looking for academic help and just talks with mentors to really look at carbon emission modeling and environmental data to really help us improve our footprint estimates. And we're also always looking for ideas. So essentially, if you have any ideas on how our data can be used differently, so company and product level emissions data, please connect with me at my email. Thanks for listening.
Great, thanks, Alexander. Lots of good questions coming in. It probably won't surprise you that there seems to be quite a common theme that they're interested in your data sources. So to start with, I mean, so the first question is, how do you get over the issue that the product category will only be as good as the company level data?
Nick, do you want to cover that?
Yeah, sure thing. Sorry, could you repeat that? What was the second part?
So it was how do you deal with the issue that the product or category will be only as good as the company level data?
Yeah, so like how we standardize company level data might be one of them. So I think just to generally explain our API, so we take purchase information like MCC, so a category code. So I guess it's like the mappings there that might be asked, and also basically transaction information, such as we try to identify from the transaction name what the relevant merchant is. So there's kind of 2 levels of data that we work with, and usually kind of 3 if we have the product level information as well. But for banks, sometimes that doesn't tend to be the case. But the category level data, we either get essentially the US EEIO or the ones provided by the UK, or in some cases, we've had to calculate the EEIO factors ourselves from IO tables for specific kind of different countries. So that's the fallback if we don't have the merchant level data. But once we have merchant level data, we essentially standardize for scope 1, scope 2, scope 3. If there's missing subcategory values for scope 3 and scope 2, or we detect there's an outlier, we either just don't count it or use, if there's just a small amount, machine learning to try and fill in the gaps. So at least that we can have basically standardized emissions factors across companies. So I think it's probably the latter which you were looking for, which we try to standardize for company level data by detecting outliers and using machine learning to try and fill in the gaps when there's breakdown data that's missing.
Great, thank you. And just one question which came in was around sort of macroeconomic factors, and how do you deal with the challenge, say, of different jurisdictions counting different energy production in different ways in terms of sustainability?
Yeah, great question. So usually that's kind of already taken into account when within the company level data when that's reported. So for example, if they use kind of market-based approach or location-based approach in scope 2, that the energy locality can kind of be taken into account there. But the EEIO factors, if we don't have that country, we try to calculate ourselves from IO tables. So that's usually taken into account there as well.
Great. And are you aggregating across the product supply chain?
What? Sorry.
So are you taking data from across a product supply chain? I think you're taking your data mainly through the tables and banks, but does it cover the comprehensive journey of a product?
So currently, right now, we're doing cradle to gate, and just making sure. I think the hard problem here is standardizing company level data with category level data. So we just make sure that it's consistent across. But we're looking to try and get the downstream emissions to be part of it as well. It just tends to be hard to get that kind of information. So that's kind of an improvement that we're looking at as well. The downstream of the product and the recycling. And something that we're going to be looking to try and include.
Okay, and the one question, do you have a way to let companies scored on carbon footprint by product to view and potentially correct or help you improve the information available?
Yeah, so yeah, I'll let you take this one, Alex.
No, go ahead, Nick. I mean, feel free. You're on the data side, so go for it.
Yeah, so one of our next products that we're looking to launch is the Open Carbon Portal. So we really very much want this to be kind of an open journey in collaboration across companies and people involved in the sector. So we really want to have this basically be open, basically gather feedback, be able to label it better if other people know of sources where this is more refined, and get kind of company input. And we think kind of having the data open in a central place is the first step towards trying to improve that and making it more public.
Excellent. Well, I think we're going to have to move on, but thank you to Connect Earth. Great answers, guys. There's plenty of questions as well, which I'm afraid you're now going to have to work your way through when you're now you're not presenting. But thanks everyone for the questions you've put in.
Thank you.
So let's move on to the last presentation in this section, and this is by Vested Impact.
Great. Good afternoon, everybody. My name is Kimberly Abbott, and I'm the CEO and founder of Vested Impact. Vested was actually started 2 years ago with a goal to redefine millionaire to be a person who impacts millions of lives. By way of quick introduction, I'm an engineer by background. I've been a founder before, but my previous experience was actually with the United Nations, where I was hired by the UN to build for them a platform that could assess the impact of the $8 billion that they invest in peacekeeping operations every year. And it was through doing this work that I realized, whilst the UN have an $8 billion problem on how they allocate for and account for impact, I realized the capital markets has a $25 trillion problem, but also a $25 trillion opportunity to make money matter. Now, I don't think I need to tell many people on this call what's happening in the sustainability space right now, but we are on the cusp of one of the greatest wealth transfers in history, of a generation that cares and wants to make their money matter more than any generation before. And they want to do it in categories and areas that have kind of never been considered before, beyond the ESG and beyond carbon. Now, the big challenge, however, and what that has led to is an estimated $25 trillion waiting to be invested in impact. But that's actually the problem we're trying to solve, because that money isn't actually being committed. And one of the key things holding it back is an inability for people to answer the fundamental question to investors of what is the impact of my money and how do I know it's so? So Vested was created to solve that problem. Vested is a platform that assesses the impact of companies' products and services on their contribution to addressing the world's greatest challenges, which we align with the UN Sustainable Development Goals. Now, just really quickly, I know in our topic sentence it says ESG, but I thought it worth explaining how vested and impact is actually different to ESG. ESG, in its most traditional sense, is essentially looking at how a company behaves. It looks at the outside in, sometimes the risks of the environment, of compliance on a company or an asset. What we look at is the opposite, and the next step really of what is the impact of that asset, of their products and services outwardly, on whether they help or hinder us achieving the world's greatest problems. So how does Vested do it, particularly when companies don't actually report impact? We use data. We pull on over 100 million impact data points. This is data from the UN, the World Bank, the OECD. We assess it across our proprietary algorithm that then outputs it into a system that essentially allows investors, asset wealth managers to compare and look at and attribute the impact of companies across a variety of issues. They can drill into the details on how they're making an impact, where they're making an impact, and also the interconnected nature that impact brings. What we're trying to do in the sandbox, so we have an MVP that assesses impact. We can attribute that app for funds, but what we're trying to do in the sandbox is actually to attribute down to look at, can we make a personalized individual impact rating for end users? And we're doing that by using kind of synthesized consumer investment data, simulating kind of consumer investing apps to see if our algorithm can apply at that level. So finally, I guess what we're looking for and what we're asking from you, like many others, is mentorship and connections. We're looking specifically for anyone wanting to pilot and use our data, asset managers, wealth managers, probably most suited. And we're also looking for anyone, that's looking to invest in a company, that's looking to redefine millionaire. We're also looking to raise later in the year. So thank you.
Great, thank you, Kimberly. Thanks for taking us through your presentation. Has anyone got any questions for Vested? Last time I said that about 10 questions appeared within a second, so be careful what we wish for. Right, here we go. So one question, Kimberly, what's your impact data verification process?
So what we do, which is quite unique, is we don't rely on company reported data, which inherently is kind of an independent verification in itself. Because I come from the sector, the impact sector, what many people don't realize is there's a wealth of data on impact. The UN, World Bank, Eurostat, for example, they assess, the access to mobile phones in Africa or access to internet. So we're kind of able to, instead of asking Vodafone, for example, to tell us or to submit what they are providing and the scale of access they're giving, we can actually use these independent sources. To kind of verify it even more, we use as many multiple sources as we can along similar data lines, which helps us to kind of get that kind of triangulation and attribution more narrowed down. But that's the key way we kind of actually try to not ask companies to tell us what they do, but we tell them what's the impact that the data shows they're really having.
Great. And when looking at the impact of specific assets, how do you get around the issue that a lot of asset location data isn't publicly available?
That is literally our biggest challenge. The two factors, and if anyone has any help, we'd love to hear. The two biggest challenges we face, similar to actually the team before, is understanding what a company does and where they do it. So of course we use categorization data, we use the kind of, anything we can get. We also use a lot of kind of natural language processing and machine learning to just try and pick up the major markets that they work in. At the moment, for the kind of key S&P 500 and top 2,000 assets, we will manually basically, dig around and try and fill those gaps on location. But that is a key challenge that, if anyone's got any good data sources they could recommend, we'd love to hear that as well.
Great. And this is a similar question to one posed a little earlier, but how does your algorithm combine the macro and company-specific impact data?
Yeah, if anything, we're really good at the macro. A lot of impact data is country specific and regional specific. The challenge we actually have is moving from that macro down. So again, it's really about aggregating as many data sources for things like renewable energy. We can get that at a regional level. So it's not just about, is the company operating in the United Kingdom? It's about maybe their plants are in Brighton or different. So for us, again, it's really about as much data as we can get and as nuanced as we can get it. So impact starts at the highest level and we get down to kind of outcomes, outputs, and through that.
Great, and that's probably a good segue to, I think, will be our final question, Kimberly. But is the impact measure something you've invented, or is it an established model? And how have people responded to the measure?
Yeah, that's a great question. So it is a proprietary methodology. So we've got a patent on it. However, it is based off kind of the leading social science that, the impact sector have done this for decades. And it was something I very much kind of learned my experiences at the UN. But it's based on things like, if anyone knows the Impact Management Project and a few of those, what we tried to do was pull together what we believed was the best practice from all these bits and do it. We have piloted it with the UN, as well as a number of financial institutions to try and get that validation on, is this truly quantifying impact? And is it ever perfect? I'm not sure, but I do believe that, we can get as close that is reasonably, impactful and possible.
Great. Well, thanks very much, Kimberly. I think we're going to have to wrap up there. So thank you for presenting on vested impact. We're now going to move on to the second cohort, which are the 5 teams who've been working on validating and automating ESG data, automating assurance of ESG data. So can I ask the first presentation, which is Telespazio, to take us through their presentation?
Yes, good afternoon, everybody. My name is Maria de Faragon, and I work in the GI information team in Telespazio UK. So we are trying to create a FINEO, which is a way of linking Earth observation with ESG disclosures. So who are we? Telespazio UK is a space company that provides metrics extracted from Earth's surface with satellite imagery. Our team has the vision and the excitement to use our Earth observation capability to enhance decision-making for ESG investors. Earth observation is a magnifying glass for ESG transparency and validation. It is a source of independent global data that validates environmental disclosures, can guide regulators on measuring environmental disclosures, and assist companies to improve their ESG rating by better understanding the impact of their activities. So the specific problem that we are trying to solve is to improve the sustainability reporting in the extractive industry, to be more specific, because currently used to build back corporate reputation and is more of a pledge document than a disclosure. That's the sustainability reporting at the moment. Environmental reporting also needs to be empirically, needs to have an empirical scrutiny, and quite often misleads by omission with lack of effective and credible external verification mechanisms. So Earth observation for sustainability reporting is a neutral bottom-up understanding of risks and impact for ESG reporting and aggregates asset-level ground truth data. So there is a lot of room for innovation in this sector, in this part of the digital sustainability sandbox. So Fineo is the name of our solution, and it's a modular AI system which uses satellite monitoring datasets to validate geographically and temporally specific asset disclosures from companies and corporations whose activities imply change in land use. We are focusing in the SASB materiality map, specifically in the dominion of environment and in the sector of extractives. So the aim is to support all land use change impact assessments and the creation of environmental impact indexes, which we think they are missing unless we are wrong, related to land use change and impact. So we believe that our Fineo solution, key beneficiaries will be the ESG fund managers, banks and investors mainly for decision making, the improvement of ESG reporting in any of the value chain parts of this business, and then of course to help the extractive industry to improve their ratings. So for the demonstration specifically, the use case chosen is forest loss and damage and forest recovery within and in the proximity of protected areas. That comes after a few weeks in November and December talking to different stakeholders. So the problem is that according to the World Bank, 44% of all operational mines lie in forest. So the aim of Fineo for this proof of concept is to categorize forest land according to area of forest loss and forest health impact in mining sites, but also to create forest impact and recovery indexes, which we believe are lacking at the moment for ESG criteria. So we have attempted the first scoring system, which is looking at forest impact based in 3 parameters: area of forest loss, forest decline related to vegetation health of the forest, and proximity to protected areas. But also, let's not forget, we need to be positive. In some instances, the forests are being recovered, and that needs to be measured as well and be part of the ESG rating. So we do have a 10-week plan. We have carefully designed. I'm sure it will change because we are just starting almost from scratch, although we have the first phases of the algorithm already set up. And we do take this opportunity. First of all, thank you all to be listening to us today, but we need collaboration. We need to collaborate with ESG analytics and reporting companies to develop a go-to-market solution and not something that we are developing mainly on our own or from what we hear. Work with special finance and climate data vendors to experiment API integration to the service offering, and of course also to consult with the industry leading organizations to understand ESG disclosures and practices to fine-tune the algorithm. And also I would like to take this opportunity to please ask you to help us by completing a short survey that I'm going to leave in the chat in a minute, because it is important that we have different stakeholders on board in order to develop the best product for the validating ESG data. And thank you very much for listening.
Great, thank you, Maria. Let's go straight into the questions. And so the first one is, how do you connect the deforestation and who created it? For example, just because it's located next to a mine, they may not be responsible for the deforestation.
Well, we have been working for the mining industry, for the extractive industry for many years, to be honest, and we actually we are able to associate very, very quickly, that the impacts that are occurring because of the mining activity is associated to the forest loss. I don't know how to explain it better, but I mean, geographically and temporarily speaking, it's very easy to associate those locations with all those changes that are occurring because of those activities.
Great, thank you. Does anyone else have a question for Maria? So yes, just one question is, excellent presentation. How do you label the data? Is it done manually?
Well, we are at the beginning of the development of Fineo, so at the beginning it's going to be a manual. So we are going to go through two different phases of machine learning. One is going to be supervised and the other one is going to be unsupervised, and some of it will need at the beginning to have a manual labeling, yes.
Great. Another question is, would companies have a right to appeal?
To appeal to our findings?
Yes, I suppose it's like it probably linked to the previous comments about how do you apportion responsibility. Would there be a process where companies could appeal on the information provided?
Well, we haven't thought about it yet. We are at the beginning of the development of INEA, but certainly something very important to think about, really.
Right, thank you. And another question here. Do you have the capability of measuring chlorophyll level in other areas, for example, water bodies?
Yes, we do have that capability as well, yes. So I would be happy to talk to whoever is asking that question. And
I think it must be a science teacher. But, I haven't used the word chlorophyll for many years. But anyway, so just probably one time for one more question, if that's okay, Maria. So is it all historic data, or are you creating any predictive analytics?
Yes.
Sorry, please go on.
Yeah, very good question. Yes, we are training FINEA with historical data. So we are using 3 different satellite data sets, and the Sentinels, Landsat, and then planet data as well for more specific granularity in our measurements. And sorry, can you remind me the question?
So it was saying, are you creating any predictive analytics?
Yes, sorry, yes. So that's to train FINEA. And then for the future, we will be looking at near real-time updates and predictive behaviors. Absolutely, yes. Fantastic. That will be the next phase of FINEA, definitely. Thanks.
Great. Well, thank you very much, Maria. And actually, there was a couple of other questions that come in from Kevin Kassar, who you may wish to pick up in the chat. So thank you. That was great hearing about Telespatio. And now we'll move on to our next presentation.
Thank you very much.
So we're now going to hear from Arivu, and apologies, Matthew, if I've mispronounced the company, but over to you, and you can correct me as you go.
Not at all, no problem. So hi, everyone. My name is Matthew Nelson. I'm the founder of Arivu. I'm joined by Mark Cliff, our CTO, and Mike Dean, our head of commercial. So we're representing Arivu and our partners in the sandbox Concordium, which is the world's first identity-led and regulatorily compliant blockchain solution, and our partners at RSM, which is the world's 6th largest audit and tax firm. And together, we are transforming the way that companies own, prove, and share their ESG data. So let's look at the problem. Of course, corporates who are reporting their sustainability and ESG face significant challenges in assembling this information from company silos. It's often done on an ad hoc basis. And importantly, it is self-reported and therefore open to greenwashing, or reflecting a rosier picture of your environmental footprint than is actually the case. Now, what are some of the drivers that are really impacting this is that there is over 130 trillion in capital globally that's currently pledged toward the transition toward net zero. Now, as a result, any company that is reporting their ESG profile, that profile is directly impacts their availability to capital. It impacts the cost of that capital. And of course, it can result in stranded assets across the operational footprint. In addition, if they get it wrong, there's significant reputational risk to the business. Then enter the regulatory imperatives, where we have sets of rapidly changing and consolidating, but mandatory ESG reporting frameworks that companies are needing to report to. Very importantly here as well is the emergence of audit and assurance requirements over that ESG data, which of course adds an enormous layer of complexity to an already challenging process. What reporting companies and their investors and lenders need is accurate and trustless ESG data with permissioned access for ease of audit and assurance to eliminate that greenwashing threat. Arivu's platform is really supporting the reporting companies, not only in the assembly of complex data sets, but also in the assembly and management of the evidence required to take that data through an assurance and audit process prior to reporting. How we're doing that is using distributed ledger technologies and blockchain to create a frictionless and permissioned environment for the audit and assurance of this data, so that the reporting data element, which is audited and assured, can feed into any number of reporting frameworks that are required by multiple different company stakeholders. Very importantly, the Arivu platform supports that reporting company in managing this entire process through extended supply chains and large customer bases, which make up the Scope 3 reporting companies. So the future of ESG disclosure from an Arivu's perspective is one where there's transparency across portfolios of complex business ecosystems. And in this space where immutable ESG data is owned, proven, and shared by the companies reporting it, and where frictionless data access is provided to the stakeholders as and when they require it. In addition, there's an ability to monitor the net zero transition of companies over time, and then availability of comparable company and sector benchmarking data. And in the sandbox, we're seeking to prove out this the ability to audit and assure this information in the context of distributed ledger or blockchain technologies. Happy to answer any questions at all, but from the sandbox community, we're really seeking proofs of value opportunities to add to our growing list, and also collaboration opportunities with data sources and other, particularly reporting solutions. Happy to answer any questions.
Great, thank you, Matthew, and thanks for telling us more about Arivu. So first question is, how applicable is this for SMEs, and how can this help small businesses identify and develop their own ESG scores?
It is made for SMEs. The frameworks that we're using are available for any enterprise that is seeking to report according to an ESG framework. It is based on the framework that's chosen, whether that's TCFD for the UK or Sfdr for our European counterparts, particularly in financial services. So it's very much made for SME companies to get on top of this.
Great, and then we've had a few people asking similar questions on a similar theme, which is, what is the value of using blockchain technology, and how might that help assure the data?
Yeah, great question. And the value is really about the security and immutability of the information as it's posted to blockchain. In our world, the reporting element, that piece of data, that calculation or KPI, which is reported in an ESG framework, is at the center of our data architecture, and it is attributes of that reporting element which are captured and managed in I call it a frictionless space, because use of distributed ledgers and blockchains allows multiple different parties to access that golden source of immutable data that's been added.
And thank you. And what are the incentives to drive input of data from Scope 3 players into your system?
This is one of the primary reasons that we're using a public blockchain solution. And there are incentive models that can be, that we're working with experts on externally, experts in corporate reward schemes to actually put in place those incentivizations for sharing down extended supply chains, and to incentivize the timely and accurate provision of data, so that Sfdr Article 8 and Article 9 funds can report on time to meet regulatory requirements.
Great, thank you. And probably last one, just a provocative question to chuck into the mix, but have you considered energy impact of using blockchain technology?
Absolutely. So the Concordium blockchain is a proof of stake chain. So it is significantly less environmentally impactful than a proof of work chain. In addition, the Concordium Foundation will be one of the first enterprises to utilize Arivu for reporting their carbon footprint. Yes, it is. It's an important consideration, but our proof of stake blockchain makes this solution a significantly less environmentally impactful than things like the Bitcoin and the proof of work blockchains.
Great, thank you. I'm afraid we've run out of time for questions, but there's plenty of good questions for you to come back on, and one or two bits of advice as well. So thank you, Matthew, and the team at Arivu. Thanks very much for your time. So next one, Greenamy.
Good morning, everyone. Oh, good afternoon, sorry. It's already the afternoon here. My name is Zach Stevens. I'm the CEO of Greenamy. We're a Brussels-based RegTech. The goal the challenge we're tackling is that there's more and more reporting disclosures requirements in sustainable finance all across the world. And that demands more and more efforts by all players, issuers, financial institutions to collect that information and share it in a structured way. Now, based on the EU ESG framework, so EU taxonomy, Sfdr, and the future CSRD, we understand that the challenges are mainly first understanding this complex set of legislations, thousands of pages, about 2,500 data points that need to be processed in order to achieve the accurate report, a lack of human expertise to assist economic players in this exercise, IT infrastructures that need to be updated, and an overall compliance cost estimated at 2.1 billion euros over the next 5 years. Now, what we're doing at Greenamy is that we have codified all of this new legislation to multiple portals and have set a type of market infrastructure connecting issuers with financial institutions as managers and credit institutions, and now allowing them to interact with each other and exchange the data necessary for each of them to achieve their reporting duties. Now, for example, for companies, for issuers, what we offer them is a solution that has fully codified the EU taxonomy. It takes them step by step to achieve the final report. How does that work concretely? Well, basically, they add all the different entities within the group, assign the reporting managers that have the information within the company, and then they can select the different activities that they're involved in, and we will then filter the data points, the screening criteria specifically applicable to them. And based on the data they have already within the company, we will match them with the screening criteria and fill the final report with all the different KPIs that need to be disclosed. Now, the idea is to make sure that issuers, corporates spend less and less time in achieving and completing such reports, and being able to allow them to connect our SaaS to the different ERP systems, to public data and any other sources of information, and match that to the exact screening criteria of the taxonomy and generate the final report, which we also tag in XBRL, and then allow other third parties to use our open source data model and run the analysis on this. This is the report. On the left, the official taxonomy KPIs, and on the right, the underlying ESG raw data, which helps to achieve much more granularity and have a structured data model with all the information required. And the idea is to go beyond reporting and more compliance and help corporates understand what can they do to achieve the next targets set in their taxonomy and improve their overall taxonomy score with data analytics. So for example, you produce hydrogen, will determine based on your reported data, how do you stand compared to your peers, and what concrete actions can you take to improve your score? And so that when you go to banks and investors, you can ask for green financing to achieve such goals and monitor together how you're achieving them. We have an investor portal for asset managers, private equity funds to screen their portfolios. And we also have a lender portal for banks to calculate the green asset ratio of their debt portfolio and generate the official reports by interacting with their customers. Now, the EU taxonomy is one of the most advanced taxonomies, green taxonomies in the world, and we're already now actively working with other jurisdictions, and that's why we're part of the FCA Digital Sandbox to incorporate the UK taxonomy within our solution and create interoperability across jurisdictions and the international flow of green financing. We have now built an EU solution. For the next weeks, we'll look to any further developments in the UK. We have already implemented the TCFD into our platform. We are also working on actively integrating any data sets that are available through the sandbox and externally to allow automatic screening of activities. And also we're looking to cooperate with other members in the cohort and see what integrations can be done. Now,
hi Alex, sorry, I'm just gonna have to ask you to wrap up.
Now for the midterm, and I'm wrapping now in a few seconds, for the midterm and long term, the idea is to invite issuers, asset managers, banks, auditors, and regulators to connect to our infrastructure, run a pilot together, test it, improve it, and then push it to production as we're already doing in the EU currently. Thanks for your attention.
Great, thanks Alex, and thanks for telling us more about Greenamy. So I think actually you picked up one of the questions about taxonomies towards the end of your presentation, but question, why would you use this as a separate process to a normal reporting consolidation system?
So the idea is that, well, existing systems may be inexistent because it's a new framework, so they need to adapt to it. So we're one of the first that has integrated this new framework. Second, the idea is to avoid as much as possible manual input and connect to any existing system, ERP, and so on, and feed the data, match it, and generate the reports. And then lastly, reporting is not enough. You need also to, it's spending less time on reporting and more time on analyzing and improving your score over time. So that's where we bring in this data analytics and the transition tool.
Great. And another question, when you say you'll be looking to integrate taxonomies internationally, does this mean that your service has the capability to map between different taxonomies?
Yeah, that's exactly what we're doing. So we're, any new taxonomy that comes across, we're mapping it with other taxonomies. And so if you submit specific ESG data input, we'll determine under what other taxonomies it's valid and what else additional information needs to be fulfilled to reach the full scope.
Okay. And would the range of company data available to fund managers be limited to the companies participating for reporting?
So we are connected also to external data providers such as Synaptics, Refinitiv, and more that are connecting to a platform. And so the idea is that you can go beyond those that are within the infrastructure and have a broader coverage.
Right. And probably the last question for the time being, Alex, can you explain how your tools help in interoperability of taxonomies in relevant jurisdictions?
Let's take an example. You're a Brazilian issuer. You generate your ESG report, and you have one asset manager in the UK, another one in Malaysia. And so we'll be mapping the data fields with those national frameworks and allow those two asset managers to comply with their own regulation, but at the same time also being able to communicate with our issuer and transfer their capital according to those taxonomies.
Great. Well, thanks, Alex, and thanks for telling us more about Greenamy. And we'll move on to the next presentation.
Thank you for your attention.
So now we're going to hear from For Earth Intelligence.
Good afternoon, everyone. So For Earth Intelligence, we are an environmental tech company, and we specialize in geospatial and Earth observation data. We're going to focus the sandbox on enhancing transparency and credibility in the sustainable debt market. So quick intro, who are we? Our vision is, 4EI's main vision is 4EI uses space data for the betterment of humans and the planet. And we have a dedicated cross-functional team innovating in sustainable finance. We're very early on in our journey, probably the first to do what we're about to do with the FCA. And we're taking a deep dive specifically for the FCA into sustainability and debt. So, sustainable debt, it's a rapidly growing market, but suffers from inadequate transparent data, which a lot of you have already said today. There is no independent verification of sustainability KPIs and the use of the proceeds. So as people take out loans of some sort, debt of some sort, who is actually measuring what that use of proceeds goes to and reporting on it over the course of the period. So there is rise in claims of greenwashing, fines, lawsuits, and pressure from investors. So there is possibility of regulation on the horizon. So where do we fit in? So we're specifically going to use our Earth observation technology to provide independent evidence for transparent verification. What does Earth observation mean? We use satellite data, so we're essentially eyes in the sky, and we can provide change intelligence. We can see what there is now, what's happened in the last 20 years, and ongoing reporting at very frequent intervals if needed. That's the main crux of the technology offering. And the types of things we can measure are things like biodiversity adverse impacts, mining, such as illegal mining, natural capital risk, deforestation, infrastructure, methane detection. Those are the types of things we typically use our technology for. So what we're going to do now is, it's very innovative. We're hoping to provide market participants, so issuers, investors, asset managers, independent verification and monitoring of ESG metrics at all stages of green debt issuance process. So we can verify or report or understand the impact of debt instruments through the use of proceeds, key performance indicators, sustainable performance targets. So we're essentially trying to bring some transparency and credibility to the market. And to finish up, we are looking for help for anyone in that stakeholder, any one of those stakeholders, to help us with data for so we can try this concept out. For example, sustainability debt issuance in green bonds. So if anybody knows anybody who would like to work with us in the Financial Conduct Authority Sandbox to measure the KPIs and use of proceeds for a green bond, for example, please do get in touch.
Great, thank you, Miriam. And that's for Earth Intelligence. So does anyone have any questions? Just maybe wait a moment for perhaps some to come through. Yes, here we go. So bonds usually have multiple tiers, only some of which connect to environmentally observable outcomes. How do you cover the rest?
At the moment, we're not focusing on covering the rest. We're focusing on covering the environmental side of it. But that's a decision that we will make. Shall we just focus with this unique technology, or should we work with other partners to cover the rest? Or should we actually cover the rest?
And how does your view, sorry, let me just start that again. How do you do that differs from the second party opinions by the rating agencies? Is it more of an accounting assurance process, or will it create a qualitative report?
It's a big difference, because the second party opinion reports that you get are using self-disclosure, based on self-disclosure reporting from the corporate. So we are independently giving evidence. A lot of the data that is there is actually based on assumptions. So the ESG data providers will essentially rate self-disclosure reportings, but here we can, without even talking to a company if needed, or talking to the company, we can provide actual metrics and evidence of what is going on continually. So not just, once a year, however often is needed. So it can be quantitative and qualitative, the reports.
Great. And then someone's asked very pitifully, who pays?
Well, yes, a good question. I've been told, talking to different stakeholders, this is one of the problems we face, is not everybody wants real data and evidence. People saying it's needed, but do people really want it? And some people don't want to add extra auditing essentially to the process. So at the moment, it looks like the corporate would pay, but is something we would love more help with trying to explore.
Great. And probably time for just one more question. So what is your geo coverage and resolution, and how do you align images to asset ownership?
Good question. I mean, we would work globally. So, and in terms of the technology we can use, whether we're looking at one asset or a million assets, we can quickly provide answers. And how do we assign what we're doing to actual assets? In this case, we'll probably, it's the biggest question in spatial finance is the asset data. Sometimes you'll find, there's two forks really. Sometimes you'll find a company actually has a lot of their asset data, like their supply chain and where their mills are, published. So we have done independent studies on a company without even talking to one, or we would work with the company and they would provide us with literally a point on a map is enough to get us going. And we would help to design their KPIs to begin with.
Great. Well, look, thanks very much. It was great to hear about for Earth intelligence, and thanks very much.
Thank you.
And we're moving on to the last presentation of this section, and so we're now going to hear from Greenway Analytics.
Hi, everybody. My name is Philip Jarman. I'm joined by my co-founder, Dr. Maria Viglietti. Maria, can you share the screen, the slides?
I can't share the slides. It says I can't share the slides up until somebody has, the screen doesn't allow me for some reason. Can also share screen when the other participant is sharing. So can please, for Earth Intelligence, stop sharing?
I think, Maria, it's just one of my team will be sorting that out. But don't worry about the timings. We'll make sure you get your full allocation.
Thank you very much. Much appreciated.
Sorry, no, we did need Forrest to stop sharing, but I think, Maria, I've just changed the permissions, so you should be able to go above them.
Okay, thank you.
So if you give it a try now.
Yes, okay.
Okay, great. My name is Philip Jarman. I'm delighted to be joined by my co-founder, Dr. Maria Viglietti. Next slide, please, Maria. So the drive towards a net zero economy by 2050 is the goal targeted by many to slow or even reverse the climate emergency. But how will this shift in course be funded? It will be funded by green bonds. Despite the growth in the global green bond market, 40% of investors find it difficult to accurately assess and verify the impact of green bond projects. Currently, the achievement of green bond KPIs is reported on in 70% of the cases. It's reported on by the issuer. This clearly creates a conflict of interest, as the information presented will not be independently collected or presented in an investor-friendly, standardized format. So without independent and objective data, how can we track the improvements to the environment? At Greenway Analytics, we collect real-time data on projects that have been funded by green bonds. The collection of the data will come from various sources, such as IoT. To process the data, we are developing a proprietary machine learning algorithm that will, for example, accurately determine potential CO2 emissions from commercial and residential buildings, as we are initially focused on the UK real estate sector. The data will be used to produce standardized green bond performance reports on the projects that have been funded by green bonds. The data presented within the green bond performance reports will provide investors with objective, accurate, and reliable data in a standardized format. The impact could be major. It would enable the market to assess both projects and issuers based on their green credentials. It would create an accurate and reliable green credit score that investors can use to channel investment. The better the issuer performs on the green credit score, the better terms they could get on future projects. Such transparency will help deliver net zero through green bond financing. Over to you, Maria.
The project during the Digital Sandbox will be developed in two phases. Phase 1, quantification of the reduction of CO2 emission by building and comparing data before the green project has started and once the project has been delivered. How do we get the CO2 data? Estimation of property insulation status is provided in the UK and in the EU by Energy Performance Certificates, or EPC, as you can see them here. Phase 1 is to connect the Green Bond report to EPC and compute the difference of the CO2 emissions before the project has started and once the project is completed. The second phase, I need to go back, sorry, I don't know how to go back here. Hold on a second, please. The second phase is to move from estimation to accuracy. And we augment the EPC data in phase 1 by further developing an ML algorithm on thermographic images of properties, which will determine more accurately the quality of the insulation of the walls and roof. We also deploy satellite data that assess the existence and the size of solar panels to estimate energy production from sustainable sources. This data will help us to assess the CO2 reduction. So how are we going to use the sandbox? We are going to deploy the data provided. We are keen to work with experts on ML in particular to deliver phase 2. We are seeking feedback and validation from stakeholders in early February, and the second feedback and validation on phase 2 from the stakeholder for the demo. And for the project, we are looking for to work with investors, bond issuer, bond certificate, green verifier, and expertise on ML images, in particular from the Oxford Center of Sustainable Finance. And to compare with other candidates on our technology. Thank you very much for listening, and we are open to questions now.
Thank you, Maria, and thank you, Philip. So the first question is, green bond is mentioned a number of times. How do you define what a green bond is?
Yes, so that's one of the challenges. We are looking to work, if you look at our certifier, we're particularly looking to work at certified green bond. And at the moment, there are two main bodies, and one is the ICMA, and the other one is the Green Bond Climate Initiative. So they are people who issue under those two, under this schema, they get effectively a standardized way to signal to the market that they are being green. And and of course, we will need to, at some point, once we expand, to look at uncertified bond. But for the time being, we really look at certified bond.
Thank you. And so another question, is there any risk to personal data under GDPR when using Internet of Things devices?
Yes, and we are working with the, although it's not mentioned in the slides, we are working with the ICO, with the Information Commission Officer, to ensure that we are not inadvertently breaching some GDPR data. So let me be clear about that. When we look particularly at residential property, not commercial property, there is a risk that by collecting data from different sources, for example, the land registry and information around the insulation of properties, we could connect an individual to some other data and potentially create some kind of what goes under the name of green surveillance. And the question is, how can we legitimately hold potentially this data? Now, we have no interest in collecting data, for example, from the land registry and to know the name of the people who hold this data, but we need to make sure that we don't start a system of green surveillance. And for this particular purpose, we are working with the Information Commission, with Senior Policy Officer and Information Commission Officer to address this particular problem.
Great, thank you. And probably just one final quick question at this stage. And so what do you currently have apart from the idea?
We are one of the earliest stage startups. So we have collected some of the data and we are developing the algorithm. But yes, we are one of the early stage startups and we are working on developing the platform as we get along.
Great, thank you very much. Thanks for telling us more about Greenway Analytics. And yeah, now we'll move on to the next part of the presentation. So we're now going to listen to the final 4 teams who are all working on how to improve transparency in ESG data and disclosures. Just before I invite the first team to present, can I just say a huge thank you to the questions that have already been posted, because this is exactly the purpose of the occasion for the teams, to really help them test their proposition. So please do keep them coming for the final session. But now, can I ask Synaptic Solutions to give us their presentation?
Thank you, Giles. And yeah, before I get started, I just want to say, fantastic stuff from all the people that have presented so far. You really made my job quite easy, I think, when talking through what we're intending to do in the sandbox. Secondly, I'm delighted to be back because we've went in the initial pilot exercise way back in the heady days of 2021. We certainly found it a really valuable exercise for us, and indeed, really good R&D in looking at synthetic data and its use within financial crime risk decisioning. Unfortunately, my colleague Matt has got some technical issues, so I'm going to try and fumble through some of his stuff right now. First off, Synaptics, so a bit of a different slant compared to the other people that have presented so far. We've been working and supporting UK PLC at fighting fraud and financial crime for the best part of 30 years, based in Stoke-on-Trent, if anyone's had the unfortunate accidentally come to our hometown. We host 2 large data sharing consortia. Yeah, nice laugh there, Giles. 2 large data sharing consortia in National Civil and the NFI on behalf of the Cabinet Office, and we've recently been bestowed the Queen's Award of Innovation Enterprise for some of the work that we've done looking at public-private data sharing and supporting regulated institutions to make better decisions when onboarding and when remediating customers in the UK, particularly for corporates and consumers. And finally, we've specified anti-fraud organisation as designated by the Serious Crimes Act 2007. So yes, last time we benchmarked real data versus synthetic data, and it was a fantastic exercise. We went on a global roadshow, which I'd love to divulge to the audience what it was about, but unfortunately I can't. But it certainly has made some major impacts in the decisions of not just organisations in the UK, but also worldwide, as to some really interesting upcoming fraud and anti-money laundering related data projects. I'd like to say more than that. And our objectives in the sandbox are a few things. One is qualifying research and development. We last time had some fantastic interactions with mentors and with potential partners that were that were available through the platform, and indeed, helps us make better decisions in what we need to focus our efforts on to make life easier for the 160 regulated institutions that we serve in the UK. So on to what we're doing. So the key thing is that we've seen already there's an incredible amount of useful, authentic, verifiable information that's provided at the various different touch points in the ESG journey, be it from reporting through to impacts, etc. What we're looking to do is to try and find, well, what information do we actually need from a customer themselves? So somebody that's applying for finance using ESG credentials to support that application. What can we codify? What APIs can we connect to? What can we automate? How do we make it easy for financial institutions to provide ESG related lending products, whilst also ensuring that there's enough transparency in the information that's been provided to corroborate the authenticity of someone's self-attestment. Unfortunately, that also means aligning it with existing financial crime risk data, be it through sanctions lists and indeed fraud data as well, because the hypothesis being that undoubtedly no one ever lets a good crisis go to waste. And we want to ensure that if people are applying for such products or self-attesting to such a level of detail to qualify, that we also check whether there's any other indicators that everything may not be exactly as it seems. We intend within the sandbox to output a dashboard aligned to our existing onboard and ongoing monitoring tech that will call one or more authoritative ESG data sources, public registrar data, and financial crime risk data to output a usable dashboard. We know that climate impact and poor governance and adverse social impact translates into lending risk. We know that manually investigating it is time consuming and non-trivial. And where we can automate the process through integration with an increasing number of APIs, we'll stop a disjointed workflow happening for each FI unless it's already integrated with existing systems and processes. And we want to augment clients' existing systems where appropriate with risk indicative ESG data at the earliest point in the customer journey at the application stage, but also when we're going through KYC refresh, any ongoing monitoring or triggers throughout the customer lifecycle that may prompt a re-risk assessment on that customer's ESG credentials in the context of the wider customer portfolio. So what have we done? We've connected to the IDE, we've tested the ESG Enterprise API, who I believe are on after me. We've played around with open banking, looking at some of the transactions data and tested some of the other APIs available within the sandbox. I put together with Matt a low fidelity wireframe. It is so low fidelity, I'm not showing it to you guys today, but it at least details in a very high level what it is we're looking to implement. But what we're doing next, well, we've got a dedicated UI and UX person that will turn my scribblings into something that looks real. We're going to test the synthetic data assets, of which there are a significant amount available in the platform. I'd certainly recommend any startups here to apply to the Digital Sandbox, because you get a tremendous amount of information to test your products within the sandbox. And we're going to integrate the selected ESG APIs. Even just today, I know that's going to be a very difficult task, considering we've got indicators of carbon footprints in Connect Earth, qualifying the impact through Vested, cross-referencing self-attested characteristics via Telespazio. I'd also love to introduce that I work for a space company, but not quite yet. ESG disclosure via Arivu, the self-service ESG reporting of Greenamy, my apologies, for Earth intelligence metrics and evidence whenever required. And that's not just, again, at the point of onboarding, but also ongoing monitoring. So we want to cherry pick and bring in the best ones that we can, standardize where we can the information required to satisfy the APIs, and ultimately output that into a usable dashboard for financial institutions in terms of the prototype. So hopefully that's on time. Any questions? Thank you.
Thank you very much, Chris. Thanks for taking us through all that. And I'll just say that Stake-on-Trent's well worth a visit. But let's get on back to the questions. So first of all, what is the way to build up ESG data and what's included?
Sure. So the key thing is that we aren't going to be aggregating, we aren't going to be getting data from the individual institutions applying for finance. We are more aggregating the existing data sources that have been presented today, and indeed anything else that's there. So it's quite hard for me to answer that question. The key thing would be that, where there are common data points, we're doing some work to sort of bring them together and turn that into what is a holistic profile to support ESG related lending. The key thing is that also W3C are currently going through a standardization project to qualify, specifically what information is available. And we're ensuring and making sure that what we develop will be aligned to those standards as they emerge.
Great, thank you. And then how do you define lender risk in the context of ESG?
Indeed, that's a great question, and that's where we would really appreciate work with mentors. We're talking with a number of our existing customers, including a couple of tier 1 names regarding ESG with our new startup ESG departments within the banks. But that being said, we're always open to options. Key thing is in everything that we do, nothing's black box. It's all got user configurable business logic and rules to align to whatever you consider risk characteristics to be. We're providing a toolkit to allow people to make decisions rather than making the decisions ourselves. So yeah, advice from mentors and conversations with people that would actually front the risk, or indeed academics that can perceive what future risk might look like, would be really welcome from us.
Great. And I think last one, Chris. So given your experience in fraud and crime detection approaches, which naturally may not be shareable, how will you balance the potential need for ESG scoring methodology to be transparent and verifiable versus proprietary and more secret information?
Sure, indeed. And I think that's where, clearly we're providing services to the people where the risk will lie. It's information they would already have available to them. If somebody believes they are mistreated or they've been denied, it's their prerogative to communicate with said lender, should it be that there's any fraudulent or financial crime related concerns that has impacted the lending decision for that particular organisation or individual. But again, everything we do is as open as it can be to the people that we can be open with. We'd also look to augment it with machine learning and analytics. So we have a tool that is built on the aggregated insight that's fed into our data consortium to help support those decisions. And we'd very much in the future would want to include ESG related metrics within that machine learning tool to give that more holistic picture of risk.
Excellent. Have to draw it to a close there, Chris, but thank you very much for running us through Synaptic Solutions.
Thank you for the opportunity. Now I will stop sharing the second I can figure out how.
And now the second team we're going to hear for in this section are ESGI.
Okay, thank you, Giles. Just about to share screen. Bear with me a second. Hopefully you can see that. Fantastic. Okay, thank you. So I'd like to introduce ESGI and our bold ambition to be the trusted data source for sustainable finance. The ESGI team has a background in developing data solutions, including former CEO of a market-leading managed data service, regulatory product manager for a number of major data providers, and leading teams within major investment banks over 15 years related to data management and risk. I'm going to start by looking at some of the metrics. And there's some here that we've taken from a survey which was published last year, an excellent survey BNP Paribas conducted entitled the ESG Global Survey 2021. And one of the key call-outs was that 59% of respondents cited issues related to data as a top impediment to their ESG integration, and had adopted various measures to mitigate that, including sourcing and comparing data from multiple sources, sourcing raw data and really starting to drive the transparency of where information is coming from, and then conducting their own research on top of the external providers. We also see from the same survey that 67% of firms are prioritizing technology investment in ESG reporting and disclosure. And the reality is that firms are faced with multiple complex reporting requirements, both voluntary schemes, such as the net zero asset management and banking initiatives, but also increasingly mandatory disclosures as well, whether that's schemes like Sfdr, which impact largely the asset management industry, the FCA's own SDR initiative, and areas such as exchange listing rules, which are mandatory for those firms that list. These initiatives and these requirements are growing exponentially, and they are still evolving very fast. ESG data does present a number of major challenges for financial institutions, not least the fact that data is scarce in some areas, and certainly we often find that the data is unstructured at source and often has a marketing slant to it because the information is in sustainability reports and often gathered from annual returns. Information where it's available can be expensive. It's certainly opaque in terms of source of information, in terms of the derivation rules and logic. We see a real publication lag, which is a major challenge for firms where data can be up to a year old that you're making investment decisions on because it's come through that circuitous route from unstructured data through collection. And then finally, all of these new requirements and these regulations presenting both complex but also conflicting standards. For example, Sfdr requires financial information to be reported in euros, but often the data is not published in euros by the firms that report it. And that's just one example. There are many like it. So with ESGI, we're focused on developing a solution which embeds innovative data collection. So sourcing data through multiple channels. That includes directly sourcing information from the financial institutions with embedded intelligence. We also, through ESGI, can reach out through automated data collection. And of course, organizations have a lot of data today. And if you want to introduce your own data into the platform that you already have, we want to provide that option. We provide transparency, both for the sources of data, but also for the rules that are being applied. The ability for real-time publication, but also real-time challenge. You can challenge within the platform any of the data points back to the direct source. And then, of course, a rules engine for each use case, which is built based on detailed analysis of each of the reporting requirements or regulations. I'm going to hand over to Tim now, to Tim Box, who is the ESGI product lead, to explain a little bit more about the platform. Tim.
Thanks, Mark. So we are probably a little more advanced than some of the other participants in the cohort. We have a prototype developed. Thus far, we have introduced the capability to collect atomic level data at a company level, and the ability to attach supporting evidence and also to provide an attestation of that data as well. This, we think, is going to help with driving trust and transparency. The functionality allows the clear lineage definition and also separation of multiple data sources if they exist at the moment. Again, a function for firms to close gaps within their existing data. So our current focus, which we hope to achieve during the sandbox, is to enhance and develop our portfolio view, or in the Sfdr terminology, it would be the product level disclosures. So the idea that we can aggregate data from a company level at a product level to provide transparency around the derivation rules, the logic to calculate each of these adverse sustainability impacts, and to assist firms with the Sfdr reporting disclosure requirements. So, and again, within this, the opportunity to identify data that's missing from within the repository that's required to perform the disclosures. So you probably guessed our first use case is Sfdr reporting. And during the sprint, we're working with our technology partner to build up the capability. We're also looking at additional data sourcing. Can we automate the retrieval of content and integration, the unstructured data ingestion? And if we have time, we'll be then moving on to net zero targets. And again, what we need, assistance, and we're putting together some working groups. We're looking for SME assistance to confirm our PASI interpretation, specifically around the sovereign and supranationals and real estates. We want to make sure that we're on the right track before we go further.
And lastly, we're interested to understand any further priority use cases that might be net zero transition tracking for banking loan portfolios, SDR, EU taxonomy. But we want to hear from you, and we're very keen to work with you to develop a scalable solution that you can deploy within your firm to solve for multiple ESG reporting requirements. Thank you.
Great, thanks guys. Great to hear more about ESGI. So first question, a lot of banks are still trying to work out what best of type ESG data looks like. How have you come up with your thoughts on what good ESG data is? And then for context, the question is added, I think I read somewhere there are over 2,000 ESG data sets on the market, and that's before you consider open source.
I think we heard on the last presentation that the ability to be flexible is going to be important in any technology and reporting solution. ESG is no different to many other types of reporting where different firms will have their own prioritization that's already defined within their own in-house rules. So we want to be able to offer the flexibility where firms already know what the priority is. But ultimately, by delivering a solution that sources data direct from source and allows evidence to be attached and provided with the data, then we hope that we can drive trust in the content, and transparency. And then the waterfall of rules around where you take data from is defined based on each individual use case.
Great, thank you. I think actually it's probably the only question we've got for the time being. I'm afraid we probably need to get back on schedule, but thanks so much for your presentation, Mark and Tim, and thanks for hearing more about ESGI. So can we please move on to the next presentation from QPQ?
Indeed, thanks very much, Giles. Let me just share my screen. So my name is Gavin Powell, and I'm the operations principal and ESG lead here at QPQ. I've got quite a long background in large-scale innovation programs, and more recently I've been working in decarbonisation and financial services, which brought me onto my job here at QPQ and this sandbox. So QPQ is a deep tech company where we're creating a network infrastructure to establish what we call the Internet of Economics. It's been in development theory for a number of years, and the actual technical capability has been in development for over 2 years now. And our first sort of non-ESG product, which comes out of that development, will go into market now in Q1 of this year. So the things we want to do with respect to ESG is that we want to bring transparency rather than opaqueness to this ESG data and its reporting. And we want to add integrity across the whole value chain. And we want these to be able to enable the whole carbon economy and allow us to realise some of our net zero ambitions and goals and objectives. So the carbon economy, it lacks integrity. You've heard quite a few of our Sandbox colleagues mentioning similar things. And that lack of integrity comes into the carbon assets, whether they be green bonds or sustainability long bonds or carbon certificates, etc. And that reduces their attractiveness, and it also facilitates greenwashing. So for us, the integrity is about the accuracy of those products, the detail, the truthfulness and the correctness, and then being able to report on those throughout the system. So the consequences, if we don't address some of those issues, are that the amount of suitably valued green debt that we get into the system is limited. And it also prevents free market conditions for the sort of whole carbon economy. And the sort of impact of those is quite bad. So it's going to really slow down or even block the realization of some of those net zero ambitions we got, not just in the UK, but globally. So for us, when we look at the current state, we see it as being really unfit for purpose. These red boxes are the places where we see that there's issues happening and things that really impact that integrity. So at the supply chain, we're not collecting enough data, we're not going deep enough into the supply chains. At the company levels, the way they report on their financial risks is quite often opaque. Bad data and inaccurate data is introduced, whether it's for nefarious purposes through greenwashing, whether it's accidental through mistakes. And all these come together to then create those sort of lack of trust in the system, which means that less money and less investment is going to happen, and there's going to be issues with any exchange mechanisms. So at QPQ, there's a couple of really core technologies as part of a suite that we've been developing. And the two that we build upon for the sandbox are called a DRADA and a TCA. So the DRADA is a data-rich digital asset, and it's a pair where we actually hold the digital asset on one half, and that's connected through mathematical proofs into the token, which is part of the DLT infrastructure. These sit inside a TCA, which is our treasury and custody accounts. And this is actually a virtual computation environment where we can perform analytics on that ESG data at this sense. And later on is what we use for issuance, treasury and custody of financial assets. So the difference of these for us is that these are highly scalable in the way that we perform this technology. And it supports big data analytics, completely secure, and it allows us to remove complexity and overhead from any of the applications that we create. So if we move on now quickly to the QPQ solution, these are built on those DRADAs and the TCAs, where we actually collect data or allow data to be collected from each of these elements through the supply chain that creates this chain of trust that we can actually use then to do the analytics. It's been built from the ground up for regulation. So we can provide views and disclosure to regulators to actually see what's happening from the company reports. And then with the same platform that QPQ is developing, this goes on to support carbon exchanges and green bonds, which were later on in the process for us in terms of the development. So one of the big outcomes of doing the platform this QPQ way is that we hope we can enable more debt to be raised for the transition to net zero, and we can make it much more inclusive, so it's available to all types and sizes of companies rather than maybe just the large ones who are more suitable for things like green bonds, which might be in the hundreds of millions of pounds. So in terms of what we need, we're the platform that we put the data and the information onto, and we provide that assurance once it's on there, but we still need other partners and end users to help us with our proof of concepts, people who are good, or companies who are good at the auditing and the accreditation of the data that we then have on our platform, just to make sure it complies and conforms with any future regulators that we want to get involved with. And that's it. Over to you. Thanks, Giles.
Great. Thanks, Gavin. Thanks for taking us through QPQ. So does anyone have any questions for Gavin? If you have, please put them in the Q&A. I know it's been a long session, but just one more presentation after this. So we're keen that you ask your questions and help the presenters with their challenges. So how about just to kick us off? How do you get confidence that the data supplied to you early in the supply chain is accurate?
So that's a pretty consistent question, I think, for a lot of the presenters today, is how do you actually trust that data that's coming onto the platform? So there's a few different ways that we look at it, whether it's the company supplying that data onto the platform, we put that responsibility onto them, which is a simple sort of get out of jail clause. But other ways are looking more towards metered Internet of Things type of solutions, third-party solutions who use multiple sources to try and validate where the data comes from. And people like ESGI who do similar things to that can bring some of that accreditation. Or we can just go through the route where you do some random audits to a certain percentage of those supplying the data. But ideally, we want to create that chain of trust through the supply chain. So if you trust your nearest supply chain neighbor, they trust all their neighbors, and that creates that sort of environment. So that's what we're aiming to achieve.
Great. And what's your data value add?
I was going to ask you to expand on that, but that's not your question.
I'm afraid that's it. That's it.
What's our data value add? So in terms of the data, I'll try and answer it from my perspective. Maybe I've got this wrong, but if you get the raw data coming onto our platform, when it sits within what we call our DRADAs, that gives a private perimeter, which you can do the analytics within, and you can then expose or do the disclosure via those analytical algorithms. So you still keep the privacy of your own data, which is very sort of important to you, but it's still allowed to do that disclosure. I think that might be the best thing I can think of in terms of data value add for them.
No problem. And then there's sort of a couple of questions which I'll try and combine. So one is, can you sort of clarify the purpose of the token? And also, is it like a crypto token, and are you using proof of stake?
So we do use proof of stake, but we use interoperability, so we can connect to a number of different blockchains and possibly even create our own later in the future. So the token is that pointer to where that goes. We actually have those mathematical proofs that mean that if anything changes on the token, then it will change on the asset side and vice versa. So that gives you that security, and hopefully that pseudo-regulated perimeter existing within there as well.
Great, thank you very much. I think we'll leave it there, Gavin. So thanks so much for taking us through QPQ. And we're now going to move on to the final presentation this afternoon, and that's from Coriolis.
Hi, I'm just sharing my screen. I'm Rebecca Harding. I'm the Chief Executive of Coriolis Technologies, and it's a huge privilege to be here today to give you an opportunity to understand what it is we're doing in this space. If I just say to you, Coriolis Technologies is making trade sustainable. It is a big challenge within the trade sector. And what we have with our platform, and we've been collecting data, aggregating data for 4.5 years now and longer in terms of the conceptualization of all of this. What we're trying to do is allow banks to monitor the environmental, social and governance health of the world's companies, supply chains and nations. There's no harm in not being ambitious. We're facilitating supply chain transparency and measuring ESG impact through all tiers. Now, let's unpack that a little bit. For a long time, we've been looking at trade and trade finance. Our clients are based in the world's largest banks, including the main high street banks here, international banks like the Asian Development Bank and Afrexim Bank as well. And over this period of time, it's become very clear to all of us that within Coriolis, that there is a problem for trade finance in understanding how to make those transactions sustainable. Trade contributes a huge amount to climate destruction, climate change, and carbon emissions. And so clearly some kind of solution has to be found. The issue, however, is that if we're going to make this useful, it has to apply as much in a tier 4 emerging market economy and to a tiny business as it does to a very large conglomerate. So what we've done is we've started this process of developing a passport for sustainability. It was an idea that came from banks, and out of that idea came our Cosmos consortium, which is effectively automated sustainability scoring. Our Cosmos consortium consists of more than 42 banks and organisations who are involved in the sustainable trade agenda. And the key priorities with what we're doing is to make what we're doing universal, non-punitive so that it encourages change, non-gameable so that it can't be influenced by the company, it's entirely independent, and it's scalable so that it can be done at a transactions level. You can see the reason why the Bank of England Prudential Regulation Authority said back in 2021 that firms should fully embed their approaches to managing climate-related risk by the end of 2021. We still have some way to go. And if I just look at our trade data from around the world and the work we do on matching to sustainable development goals, there's approximately $17 trillion worth of trade out there in trade finance, but only $1 in every 5 is associated with sustainable development goals and positive contributions. So clearly there's something to do here. And so what we've done is very simple. We've said, what is it that all of these companies have in common? The one thing they have in common is their product or their service. And because we're looking at trade, there's a way of coding that product. Companies can get to know their product, get to know what goes into it, and we can actually assess through that product and the codes attached to that product what is sustainable and what is not sustainable. And I'm very quickly going to show you exactly what this looks like. So we have a platform here, which we're calling our Atlas platform. And in it, if I type in Coriolis Technologies, I can search for Coriolis Technologies, and this is what is happening at the moment. And this platform is live and it's used. And what it does is it immediately brings up a score, and I can share the details of how we create this score shortly. But what we do is we create a sustainability score for the company that is based on the match of their product to Sustainable Development Goals, a code that comes from the United Nations, and to the EU taxonomy. So this is actually giving information straight away to the trade finance provider, but in terms of the questions that we get the individual business to fill in, it's also helping the individual business to service that market and improve as well. So what I'm going to do now is go back down to my my presentation, and say that the real thing that we need from now on is an opportunity to talk to everyone, because Coriolis and the role that we have in all of this is in developing a consortium, is in making sure that we build to this network that we always have already in clients and partners. And these are just some of the organizations that we're working with. So what we're doing now is we're trying to tap into this addressable market. We're trying to solve the problem of SMEs transitioning towards zero carbon, but also meeting sustainability goals in terms of social goals as well. And we really know that we can't do this unless we all pull in the same direction. So we all want to work together, but we particularly want to work with you. We want investors to help support our product development. We need data partners to help us aggregate more data. We need to work with regulators and policymakers to understand how this very simple product-based approach works. And of course, we'd love you to join our Cosmos consortium. Do get in touch. Thank you very much for listening.
Great, thank you, Rebecca. Thanks for taking us through our final presentation this afternoon for Coriolis. We've got just a little bit of time, but if anyone has got a question for Rebecca, please do put that in the chat. I fear you may be suffering from being one of the final presentations. I think we'll probably have to leave it there. But if you do have any questions before we finish off today for Rebecca, then please do put them in the Q&A, because we can then come back to you a little later on. But thank you. We've had all of our 12 presentations from the sustainability cohort this afternoon. A huge thank you to all of them for taking us through their solutions, but also a big thank you to all of you for asking your questions, which have been a great help in helping the teams to develop their propositions. In fact, I think we've almost answered 80 already during the session. Final thing for me before I hand back to Francesca is just to say another plug for the survey, which is in the chat. It'd be really helpful for us if you can take a couple of minutes just to give us your feedback. But with that, I'll hand back to Francesca to wrap up today's session. Thank you.
Thank you, Giles. And yes, indeed, that's a wrap. And I get the lovely task of basically thanking all of our teams and you, the audience. The teams, as I'm sure you'll agree, have done a phenomenal job presenting to us today, really sharing kind of their progress so far. And I know that they'll have benefited enormously from all the questions that you, our audience, were posting to them, and they will come back to those that they haven't yet managed to answer. And I'm really excited to see how they're going to develop over the course of the next 10 weeks. So the 12 teams, as I said, now have 10 weeks to go away to develop their proof of concepts using the tools that are available to them on the Digital Sandbox platform. We will then host another demo day for you in March, where the teams will demo their solutions and really show the progress that they have been making. But in the meantime, if you are itching to find out what the progress is and you can't wait until March, you can keep updated with the participants' progress over the next few months by registering if you haven't already done so. And I'd be very surprised if you haven't on the Digital Sandbox platform at www.digitalsandboxpilot.co.uk. And as Giles said, it's really important for us to hear your feedback on this afternoon so that we can really take that learning forward for the session in March. So please do fill in that survey. Thank you very much on behalf of the FCA and the City of London Corporation for joining us today. Thank you to all our teams, and thank you, of course, to you, our audience as well. And I hope you have a very good afternoon.